You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Joe Vanazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time yet again for everyone's favorite bi-weekly source for all things options related. A little bit of options wit, some wisdom, some analysis, some edumacation. Mix it all together and you have the tasty, delicious cocktail that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from a fun little thing we like to call around here the old Options Insider Radio Network. We've got a lot of shows. The easiest way to get all of our stuff, people always ask them, how many shows do you have? What do you have? How can I get them? The easiest place to get it, of course, go to our website. It's got everything there, including our written content. There's a ton of that as well. If you just want to mainline the audio, you want to get it on your device of choice, of course, iTunes, Google Play, all those places, wherever you go, just get our main network feed. Search for Options Insider Radio or Options Insider Radio Network if you feel like typing 4 words. You probably want to go with the latter. The search on all those stores is terrible. We know that. And then you get everything, all of our 15 shows, lots of programming coming your way. So buckle in, strap in if you are indeed going that way. Of course, you can always grab us via our mobile app as well, iOS, Android. The beloved Fire OS, also every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern. You can join us live for this program, The Option Block, here via Mixlr, M-I-X-L-R. Keep an eye on our social media. We will tweet out the link as soon as we are able. If you had it before, same link again. Just follow us there. And however you listen to us, we'd love to hear your questions, your comments, your insights. So make sure you share those with us, because otherwise we don't know what the heck you guys want to talk about. And then we'll just make it up, and then Andrew will go crazy, and it's all kinds of nuts, and the show just goes downhill. So don't let that happen to you. Write in with your questions and your comments. And I can see him already taking umbrage in the background, so let's turn to him to allow him to take his umbrage live. He is the Rock Lobster himself, joining us from the land of the pit by way of a little place called Maine. Mr. Rock Lobster, welcome back to the program. Good job on the show last week.
Thank you. Hopefully I fixed all my, as usual, it would not be an option pit show or an option block show without some sort of headset issue. So
what fun
at
would
least
it be?
People will know they're in the right place.
What fun would it be if everything worked properly? But of course, you guys still managed to do an able show without me last week. So I appreciate that. Also joining us from a little bit closer to home. You know him, you love him. Uncle Mike Tussaw from RCM Wealth Advisors, a.k.a. RCM Alts, a.k.a. Going Long, a.k.a. M. Tussaw on Twitter. I think he's tweeted once since 2014. Uncle Mike, welcome back to the program, sir.
Always happy to be here to enjoy my Monday option block cocktail. And I don't even know if I even tweeted back in 2014, to tell you the truth.
So you got a lot of tweeting to make up for. So we're going to start concluding that handle in all of our tweets, just to drive you to use it. And then once you got a few hundred followers there, you'll have no choice. You'll have to do something just to tweet, just to keep all your legions of fans happy, sir. Meanwhile, let's keep on rolling. Kick off the show right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. It's been a few days, but I think I remember how this works. This is indeed the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's activity. A lot of things were rocking and indeed rolling on the old trading day today. Lots of the sessions, lots of the indices making new record highs. The S&P doing that, the Nasdaq doing it. So it's just pretty much record high day. Tucson's favorite day. Never been a better day to buy the market. Or I'm sure I'm butchering that quote. He'll come in and correct it for us. Never been a better day to buy stocks or sell stocks or whatever he wants to say with there. Usually he says sell, but then again, there's another record high the next day, and he has to adjust himself. Maybe he should say buy, and then he'll be happier. Either way, S&P closing up about 0.75% or so. The Qs, the Nasdaq, up over 1% on the day now, and the Dow, ever the laggard of the bunch today, only up a little bit less than half of a percentage point today. And of course, all this green on the screen means there's red in VIX land to the tune of VIX hovering right around 12.25. I believe that was where I wanted to go on our crystal ball for vol views last week. And then I foolishly let Russell and Mark go first. And I think Mark jumped on my 12.25. So I think I went a little bit lower, 11.75, to give him some room, some wiggle room to the downside. But I did want 12.25. So right now, at least, fast forward a week, and I will be the winner. But or Mark will be the winner. I would have been the winner. But we'll see how that. We know how these things unfold throughout the course of the week. Don't forget a week, the rest of the day, we could see vol move quite a bit, as we did, of course, a couple weeks ago when they announced the Hillary email investigation was kicking off yet again, right in the middle of vol views, and we saw VIX off to the races as a result. This time off to the downside, like I said, 12.25, off a little bit more than a half a point right now. So a lot of stuff to parse out here in terms of broad movement. Maybe interesting volume, a little bit more nuanced. You got to dig a little bit to find. That's why you tune into a show like this, where we turn. Let's kick it off. Let's get Andrew even more angry. Let's go in order of proximity today. So let's go out to paradise on earth, known as St. Charles, Illinois, where Uncle Mike Tusaw. What caught your eye in today's Sea of Green?
Well, first I got to say it. Never in the history of the entire stock market has there ever been a better time to sell than today.
I knew buy didn't sound right as soon as I said it. It just didn't sound right.
Well, I like saying facts, and we're at new all-time highs today, and it's an exciting day, and I think it is time to, unless we have a major gap down between today and tomorrow, I'll be adding some deltas to the old portfolio. So that's an exciting thing, to say the least. I think that with a lot that's been going on, I think we can debate about whether the bank stocks are the right things to be in right now. The one side of the argument is that all these wonderful regulations that everybody complains about that are going to be going away, well, it's going to take a while for them to go away, so maybe they're not the right place to be. But on the flip side, the perception of them is, so maybe you should beat the punch and get into them. So there's a lot of debate going on with the bank stocks. Is this still a buying opportunity, is what we asked about Facebook last week, and it's up 4% on the day today. So there's a lot of exciting things. We have a lot to talk about today, and I'm excited to be here. And you got Andrew to take umbrage within the first 5 minutes. Very impressive, Mark.
That's why I get the big bucks, sir. That's why I get the hosting pants and the hosting cheer, all the fun hosting accoutrement that goes with this job, because I get to give Andrew umbrage in the first 5 minutes. That said, I can already see him turning red if this was indeed a video show, but it's not. It's audio, so we're blessed. We're lucky in that regard. Mr. Rock Lobster, what caught your eye in this sea of red in the vol space, sea of green in the broad markets? Are you too feeling the Tucson love, never been a better day to sell, or is something else on your radar?
I wasn't really selling any stocks. I was mostly watching the vol products melt, which is some option pit positions we have. And melt they did. One thing that was, you're not going to see many things down 10% today, but the VIX November 30 future, because I know that's what all the listeners are watching, was down over 10%. It was down $1.60 total. And what the funny thing is it still might have another $1 to go if we settle here on Wednesday morning. So this 12 VIX is causing all kinds of consternation. And if you're a long, if you're a long vol person, meaning, the VIX is 13, so I'm going to buy some vol and wait for it to bounce. Well, a day like today, that doesn't work very well. And just because VIX is low doesn't necessarily mean it's a buy. There's still relatively rich future premium. It's not out of hand, but it is pretty solid. So you have a 12 VIX, you have $2 of future premium in that in this we'll call it the serial December contract, and but all the really short-term vol futures just got spanked, the NOV 23rd and the NOV 30. So that's something I was kind of waiting for, which is good that it happened today. So that part is good. But as we move into the holidays, I mean, except there's this Italian referendum thing, which might be something I think it will be, although I think it's more of a problem for Europe than us, since basically the U.S. seems to be shaking off whatever else is going on anywhere else in the world. So for volatility, is it a time to get long vol? At least from a vol product point of view, I still think it's would be a tough way to make a buck. And banks paused today, but they didn't go down. Goldman still not down on the day. JP Morgan still not down on the day. So I think as far as banks go, maybe they're not going to be sued out of existence for like they have in the last 8 years. That could be a better thing. And technology, while the S&P 500 is at a record, technology stocks aren't at a record, although they're still in, I would say they're in pretty good spot. You also have oil stocks that still are very far away from where they could go. And the commodity stocks are basically just getting off the floor. And I know Mike was looking at IBB. That's the drug stocks. I mean, a lot of drug stocks that were pretty solid companies are still kind of in, trading at close to year lows. So there are places where you can still find relative bargains. But there are places that also have rallied tremendously. So, maybe, and as I recall, I think the S&P 500 was at 1850 at one point this year, and it's not right now. So what do you want to go buy? That is the big question. But I agree with Mike. I mean, if you get, there seems to be a little bit of pragmatism going on. I mean, you could look at social media and all. It's like you see all kinds of crazy stuff, but there seems to be some kind of pragmatism going on, and we'll see how that spills over into onto the economic front. But right now, the market likes what's going on. Stocks are going up, and VIX is getting crushed, and ultimately, those trends, as long as they're working in the same direction, it would not surprise me to see an 11 handle this week in the VIX if this keeps up. And, like I had said in our chat room today, I would not want to get in the way of this market. So that's essentially, and nothing's going to change me on that position. So like Tusa says, it could be they add some deltas, and at least sometimes I can become a degenerate premium seller, but right now I am not interested in selling too many calls. I have zero interest in that.
Yeah, it's kind of hard to get in the way of the old freight train. Speaking of all-time highs, Henry's over there, a former Trading Tech Talk host and man about town over there, posting all the things that had new 52-week highs here in our chat. It's quite a long list. Let's just pick out a few favorites. AMAT making a new 52-week high today. Fitbit. Let's see what else. Some other names you guys might like. A lot of these names are just so many out there. By the way, for you guys out there, UAL, of course, you guys out there maybe have some problems connecting to the chat. I know they made some upgrades and some updates to the Mixler system. We had some funky problems here as well. So hats off to the hardy few of you out there who can make it all work today. I know they're navigating some stuff. I think iOS seems to be working fine, but I think like the Android and a few others seem to be having some glitch. I know they even changed our broadcast client here. So everything's kind of all kinds of crazy out there on the Mixler side. So those hardy few of you who can navigate it, welcome. Maybe we'll have to give you a special present here or something like that. Let's move on to another thing that a lot of people asked us about today. Thought would be fun to bring up on the show. Bloomberg had a fun article this week talking about how a bunch of Goldman insiders were sitting on about 1 million options they had received about a decade ago, November of 2006, and they were pretty much 10-year options, and they were about to go the way of the dodo because they had a strike price just a tick under $200, $199.84 to be precise. Gotta love those corporate option strikes that they get there. Not at 200, 199.84. And so they got those at the end of 2006. They were coming up, and pretty much right before the election, those options were worthless. The stock was right around 181. So only a madman would go exercise a effectively 200 strike call when the stock was about $20. South of that, of course, lo and behold, Mr. Trump wins the election. The market off to the races, stock up about 16% since then, and all those options that were out of the money suddenly worth a wee bit. You're not talking massive windfalls. You're talking like about 20 handles, but still. From nothing to that, it's not bad. And according to the filings they saw since about November 8th, about insiders have sold a little under $250,000, I should say, of stocks. So obviously, exercising those options, turning around, dumping the stock in the marketplace. Obviously, sitting on a little bit more stock still, because a million contracts is going to get you a lot of shares. But still interesting stuff. It warms the cockles, doesn't it, Andrew and Uncle Mike, that these guys who were sitting on money they'd probably forgotten about from a decade ago, that they got paid at the end of the day, and it's because of Mr. Trump. Doesn't that story just warm the cockles?
Especially since it's the Goldman Sachs people that probably are struggling right now. So I'm very happy for them.
You can feed the children, starving children here or in Africa. You could cure disease, or you can give Goldman guys an extra few million. And Trump, through no fault of his own, conspired to do exactly that. I thought that was a fun little, if silly, a fun little nugget that our friends over there at Bloomberg just dug up this week. We always talk on this network. We've been inundated with headlines and stories about different Trump impacts in the marketplace. Some pro, obviously some con, depending on which way you fall on the old political spectrum. But that one seemed like one of the sillier ones. Certainly caught my eye, which I thought was kind of funny. Decade-old options coming back in style. Speaking of coming back, the odd block's back, and it's coming up next.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block. This is indeed the portion of the program we don our fedoras and our fancy trench coats. Maybe once in a while we grab a nice magnifying glass or even swap in a deerstalker cap, something extra exciting. And we go sleuthing down the back alleys of the world of options. Speaking of which, before we get to that, Uncle Mike, you had to go down those back alleys last Thursday. How was your brief foray into the world of all things dark side from an options perspective?
Oh my gosh, it was scary. Don't make me do it again, Ma.
All right, well, I'll keep you on mute then to avoid scaring the children as we instead move on into, it wouldn't be an odd block these days without something energy related. We're going to kick things off in the realm of NRG Energy Integrated Power Company, in case the name didn't clue you in that they did something energy related. This is the name that does about 2,400 contracts a day, so fairly light volume, but from an odd block perspective, it's actually pretty robust. We see a lot of names doing 200-300 contracts a day. So we'll take 2,400 any day of the week. And this name actually doing more than that today. Over 2x that, nearly 6,000 contracts today. So pretty sized paper here for good old NRG. About 7-1 calls over puts. That's where our attention was drawn. If you want to find it yourself, listeners, just scroll on out a couple of months to Jan of next year, where we saw the Jan 2017 13 calls lighting it up pretty much in one massive block. 3,080 of the Jan 13 calls going up. Looks like paper selling for a whopping 35 cents. All the hallmarks of an override are there. There's no open interest on the strike, only 800 contracts. So clearly it's opening. It's not a bad little yield, all things considered, for this period. If all things stay as they are right now through expiration, our friends looking at picking up about 3%. Do the math, roll that throughout the rest of the year, and you could sit on a decent little return, all things considered. Certainly not the worst. We've seen a lot. We've seen rolls, and we've seen people writing calls 6 months, a year out for what works out to pennies. So 35 cents comparatively is just a bucket a treasure chest of riches compared to what we've seen here on this program in the past. Looking back at the year that was for good old NRG, like a lot of energy stocks, it's kind of been a little bit of push and pull, yin and yang out there throughout the year, hitting a high back in May of right around the 18 handle, then kind of slowly trending back down the other way. Seems like it bottomed out right a little bit shy of the 10 handle, 988 or so. And since then has been on a bit of an upward trend. Like I said, closing today, $11.52, up about 31 cents or 3%. So not a bad day for NRG. And our friend out there deciding, you know what, he likes it. Probably sitting on some underlying against those calls. But he doesn't like it too much past the 13 strike between now and Jan. So what do you think about this one, Senior Rock Lobster? All things considered, a fairly reasonable call override compared to what we've kicked off the odd block with in episodes past.
So this one actually looks not bad for a $12 stock or $11.50 stock. So it looks like, and there's slightly higher volatility in some of these energy names or energy producers. So not too bad. Again, probably because, maybe interest rates are going up. So then these stocks kind of get hit, which generally creates higher premiums. And that's kind of what we're seeing. I mean, the high of this stock this year was $18. And so a right probably is not a terrible idea at this point for this particular stock. So, but this is actually sort of decent almost. 3% for 2 months. That's not so bad. Not so bad at all.
That seems, dare I say it, relatively normal for, not for the odd block, but for a relatively normal person trading. For the odd block, we see a lot of much weirder and wilder stuff. This one actually kicking it off in the realm of normality, allows you guys a point of entry into the world here of the dark side of something you can relate to before we go on to weirder stuff. Let's see what else we got in store for you here today. Let's move on here. Again, all things energy here in the odd block today. Moving on to UCO. This is the Ultra AIG Crude Oil ProShares. Ticker symbol, like I said, UCO closing $10 even on the day, up about almost 9%. So another one in rally ho mode, moving along with the old market today. This is a name that does about 11,000 and change on a given day, doing nearly 3x that, doing a little bit shy of 30,000 contracts today. So a lot of call love, in particular 5.5 or so to 1 calls over puts out there. That should give you some inkling of what's caught our eye. If you want to go find it for yourself, you don't have to look too far. Listeners, let's get out here to, in particular, the 10s. And it was the DEES 10 calls that were lighting it up. Not the DEES expiring on the 2nd, and not the monthlies. Nope, right in the middle. It was the DEES expiring on the 9th. 10 halves lighting it up, starting earlier today with a block of 7,500. As the day went on, for 65 cents, as the day went on, we saw more piling into the tune of total of 10,260 on the day. All that on a whopping open interest of 86 contracts. So clearly, we got some opening paper over here. It looks like, again, paper was buying these all day long, so feeling some love. Maybe today's rally out there, they decided, you know what? This is the start of a new era, a new regime out here in all things UCO, and we want to be a part of it. Looking back at the year that was here for UCO, like a lot of energy names, it kind of had that peak again back in that mid-May or so range. Of course, that's from the last year. It was a little higher towards the end of last year into November, but for this year at least, peak around that mid-May period, and then kind of trailing off and kind of vacillating between the 12 and about the 8 handle or so. A pretty wide range out there over the past few months. But our friend here is saying, you know what, I think it's going to start flirting with that 12 handle again before it starts flirting with the 8 handle. Willing to put his money where his mouth is, to the tune of about 10,000 contracts at around 65 cents a piece. And things got to pop pretty soon, because he's not talking Jan or Feb of next year. He's talking DEES 9. Mr. Rock Lobster, what's your take on these? I'm getting a feeling you're perhaps a little less optimistic, a little less happy about these.
This is one of those, it's kind of any underlying can move up at any time. I'm just wondering what they're looking for in the price of oil here recently. This is the 2 times product, ProShares 2 times product, and what would make things get this giddy is my big question. It certainly can. It's wintertime is coming, but I'm wondering if this is just more general market euphoria or anything like that. But it's going to have to happen, and they're going to have a pretty good snap soon. There was a 8 or 9% move in UCO, the product today, and I guess it remains to be seen if it could happen again. So, it's quite a bullish oil bet, is all I can say.
Speaking of activity, and Henry's very active in our chat room over there. He says those back to NRG, those Jan 13s. He says they were marked opening, customer to customer. So there you go, Henry giving us some clarification. Obviously, his Mixler is working, so we welcome him in over there as all the fun of live streaming. All the fun technology, to make up a word here on the old program. Easy for me to say. Let's move on to our final name victim. This one we talked about in the past before. It's been a little while since we've checked in on them again, but they are back once again. They refuse to be ignored. This is Cypress Semi, ticker symbol CY. Closing today, $10.91. Unlike a lot of names out there today, this one was pretty much unched. So not the banner day that like some of the other names we were talking about out here. But that's okay, because our friend out here, he wanted to do some rolling anyway, so a nice even underlying makes that a little bit easier to get off. Of course, this name does about 5,000 contracts a day, doing about 15,000 today, nearly 2-to-1 calls over puts. That's pretty much where our eye was drawn. Our eye of Sauron drawn there to the Dees Jan 12 call spread going up. Started off 1,000 times. Looks like paper buying it for 25 cents. So that's buying the Jan, selling the Dees as the day went on. About 3,200, it seems like, total went up on both of those strikes. Now, their size open interest on both of these is about 83,000 on the Dees and about 20,000 on the Jan. So it could be closing on both legs, but it doesn't seem to be. It has all the hallmarks of someone deciding, I'll take some of that 83,000 and I'm going to move it on down the path, but not move it up, just move it out to Jan. Buy himself a little bit more time. Obviously, Dees is coming up, and that 12 strike is nowhere in sight. So give himself another month, and he's willing to shell out an extra 25 cents to do it. This one up on 2 blocks over there on the ISE. And look, if this is indeed the case, if that is our friend sitting on some sizable chunk of that 83,000 open interest, then this could be the first of potentially many more rolls to come. So stay tuned for that. I doubt if he's sitting on 83,000, he's just going to roll 3,000. That would be an odd choice, to say the least. All right, moving on to, not moving on, but looking back here at the year that was out here in Cyprus. One of the reasons this thing's been on our radar lives, it's kind of been all over the place. Back in the nadir of the market, back in February, it hit its low of around the 6 handle and has been bouncing all over the place ever since. Got up as over 12 back in the August-September timeframe, and then kind of trended back down, flirting with south of the 10 handle again, down to the 9 range. So kind of been all over the place, and now threatening to break through on the 11 side. All that movement not paying off, though, for our friend here on the 12 strike, at least unless they put him on recently, in which case, because it was flirting with the 12 for a little bit, so he had a chance to maybe get out at least of those on a little bit more attractive level. And for whatever reason, deciding today is the day to pull the trigger, at least on 3,000 of potentially 83 or 80-odd thousand contracts. We'll see if our friend continues. Mr. Rocklops, to take us home. What are your thoughts on perhaps the tip of the iceberg here of call rolling in Cypress Semiconductor?
The tip of the iceberg in call rolling for Cypress Semiconductor. What I would say is, I'm looking at 80,000 contracts, and don't you think that's a pretty big chunk of contracts to buy short-term options?
That would be a few, yes.
That's a pretty good chunk. So
80,000 quarters is a lot.
It's not a small amount of money to buy little tiny options like that. So I look at that and I go, wow, that's not a small amount of options. And so I found it odd to say the least on that score, as far as, if they're rolling and they're long all those and they're getting out of these for just, 15 cents, maybe this is not exactly a trade that or not exactly somebody you want to follow along with because
not the most well-timed of traders or newsletters or whoever's playing out there.
Yeah, I'm looking at it. I don't know how it trades unless the customer was paying a quarter for it. I don't know how a liquidity provider would pay a quarter for it. That makes no sense to me. So I'm assuming buy side for the customer, and they just have a lot of these D12s to roll, and maybe it does become a home run for them. But right now, I think, wow, that looks like a strike that you might want to write. But again, back into that puts us back into our the 1% per month kind of yield, selling a call for 15 cents thing. So just a strange, it's a strange roll if it's certainly part of 80,000 open long in CY, which, spends it could spend 3 months at a time going nowhere. So let's just say, oh my gosh, if the show wasn't called the odd block, I would almost name it the odd block, because that's such a bizarro number of calls that you might want to own.
It's almost as if we named it appropriately. Imagine that. Imagine how that works here in the world of broadcast. Well done, sir. Now let's keep on rolling. It's Monday. It means it's time for you guys to take the reins and dive on into a little mail block action.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, you guys know the drill. This is the part of the show where you hit us up, whatever's on your mind, options related. Usually, sometimes not, but usually that's the case. Political screeds, send those elsewhere. We get hit up on those enough as it is today. Also, if you're offering us some affiliate deal on a binary options exchange in Croatia or South Africa, or whatever the case may be, save your email. We don't need it. We got 1 million of those already as well. Of course, you can hit us up with your legitimate questions at optionsinsider.com. Just head on over to the website. It's all baked in there as well. Or at Options on Twitter or Stock Twits. Yes, we got them on both platforms now, so make it even easier for you guys to find us. Or unfortunately, we're still the Options Insider on Facebook. A little bit of a mouthful there. And of course, you can hit us up if you are in the live chat room. For those of you who fought their way through the difficulties today, just like RealRK did. He's telling us, or I should say following up on what we were just talking about, which is Cypress Semi. He says, thanks for getting to CY. I'm holding Jan calls. Look at that open interest. And he also said this one and a lot of semis is a potential buyout candidate. These semiconductors are going nuts lately. Well, I would certainly concur with that. This thing has been rocking and rolling. In fact, I do believe Mr. RealRK reached out to us last week about this same name. So he's been waiting for a long time for us to get around to Cypress Semi. But better late than never. I think he says, what do we have here? He says, check out the call put ratio on CY. Well, we were doing just that today. Near and out of the money calls in the next 3 months contract. So huge call buying, probably 100 million plus in value. Buyout rumors. So I got long a small amount of JN11s. Let me know what you guys think Thursday. Unfortunately, we didn't get a chance to get to it on Thursday. We're getting to it today, though. And we got you an odd block to boot. So there you go. Look at that. Look at that love we have for our listeners. But he is indeed right. The open interest is fairly hefty right now. It's almost 7-1 calls over puts out there from an open interest perspective. About 270,000 calls open, only 40,000 puts. So that does show you kind of where the attention is. Your Jan 11's not looking that bad, even with today's move kind of unched. You're kind of flirting with those, so not a bad level there. Those went out 60 cents at 70. I don't know where you got in, but hopefully that's a fairly attractive level. This thing has been rally-ho for the last week or so, so if you got in around the 9 or 10 handle, then you're looking pretty good right now, Mr. RealRK. That said, Mr. Rock Lobster, I know you guys have a lot of people out there in your pitch chat looking at a lot of names to sling back and forth. Any of them devotees of CY like our friend here, or any other semis lighting it up in the pit chat over the past couple of weeks?
The one that has been that anybody's talked about is NVIDIA. The stock's up like 50% this year. So, I mean, I don't think it's seen these levels since 1999. I mean, the company's growing like is putting up huge numbers, but oh my gosh, it is launch city. In May, it was $36. Oh yeah, not even 50. It's more than that. In May, it was $36, and it traded $92 today. NVIDIA, makers of chips that go in and you play, whatever video game that you might play on a computer. Since I don't play them, I don't really know. What is it? Take-Two Interactive. That's a Grand Theft Auto or something. There you go. But I guess they're just not for video games anymore. But take a look at that when was the last time you saw a semiconductor do that?
Yeah, half of that move coming up pretty much in the after hours after their last earnings, I believe. We talked about it live on the show, and who thought NVIDIA, of all the names we were profiling amongst the Facebooks and the Apples and the Googles and the price lines and all the other high-profile, high-volatility stocks, NVIDIA would be the one to blow the doors off. But you're right, it kind of does have a bit of a shades of 1999 feel to it. We're talking about AMD, we're talking about NVIDIA. It's like the old PC wars of the late 90s heating back up again. I remember when I was out in Intel for those late 90s years and just hearing all the back and forth, AMD, Intel, NVIDIA in that mix as well. It was just, you're right. It does have a bit of a storied aspect to it, shall we say. Let's see what else we got here. Oh, we hit you guys up. You guys are loving this question we asked you this week. Every week we give you a new question, usually put it out right before the show. Today we asked you guys, great traders need many weapons in their arsenals. Got a little poetic. We waxed a little poetic on our question here in our 140 allotted characters. But everyone has a favorite. What's yours? And then we also said if you have alternatives, you can reply, hit us up with DMs with your alternatives. But we gave you 4 pretty broad categories that you guys could choose from. We said vertical or a ratio vertical. We kind of put those two together. Then an iron condor or an iron fly. We gave you a choice of one of those two. You know which way I lean of those two, but maybe you go elsewhere. And we also gave you a straddle or a strangle, so you can kind of mix and match, make your own iron condor or iron fly if you so choose. And then last but not least, covered call or a short put. And let me cheat and bring up the live results as we speak, so I know what's going on, even though I saw it before the show, so I would be cheating if I guessed now. Anyway, but that said, Uncle Mike, let's kick it off. What is your favorite, if you have one? And then what do you think is winning our poll?
It's hard to say your favorite because it's like asking a carpenter, what's your favorite tool? But the one that I use most frequently, I would say, would be a vertical. And I'll say the audience selected, I'm going to say the audience selected vertical as well.
Interesting. Mr. Rock Lobster, which way would you go, sir? And what do you think is winning?
I like strangles and straddles, or modified strangles and straggles a little bit. But what do I think the audience is saying? I think the audience likes the vertical call spread or the vertical ratio. That's what I'm going with.
Just to show you how little editorial sway I have here. My own personal favorite, the bullish risk reversal, didn't even come on the list, so there you go. Didn't really have room for risk reversal, bullish or otherwise there, when you only have 4 options, pun intended, for a Twitter poll. But I'll go for my second favorite, which is the iron fly. I like to do a lot of different things, but those are 2 of my if I have a choice, I like those 2 as starting points, then we kind of go from there. But yeah, I was probably thinking, I thought maybe your more basic covered call and short put would be winning the day, and that is indeed the case, though it is a lot closer than I thought it would be. Again, if you haven't voted yet, add options on Twitter to get at it. A lot of you have already done so right before the show started. A lot of votes pouring in. People like to fight over their favorite strategies. And yeah, about a third, a little more than a third, choosing the covered call / short put, followed by number 2, the iron condor / fly with 26%. Number 3, the vertical / ratio vertical. And number 4, the straddle / strangle. So Uncle Mike and the Rock Lobster, once again, proving that you are out of tune with the options masses. There you go.
Andrew, I say we do a joint venture of umbrage to that one.
Yeah, I think you might want some umbrage.
I think we do. And that's the problem. Too many people trade, vertical spreads and, or they should.
You're just biased from all those 1x2s and VIX going up. They have you in a ratio vertical madness out here. Oh, by the way, Sunil, he just goes by Options Addict. He said he likes ratio spreads, but he also wants to add naked purchases into the mix. We only had 4, but that I thought about putting one of those in there as well. But a naked purchase, A, isn't that sexy. B, we don't really recommend it all that often. Unless we talk about a listener question we get a little bit later, then I might be interested in that. But that said, interesting. If you have other suggestions, again, we can fit everything into 4 suggestions. Hit us up. You know how to reach out to us with what you like to do. Maybe you like one of Rock Lobster's more arabesque type trades, as he was discussing from last week. That was a good one. All right, moving on to this one. Comes from Rico Landa. He says, "Did you guys see this? Is Cuban talking about buying puts or something else?" I guess he has a savvy financial advisor, and he links to an article from CNBC, which came out, I think, about a week or so before the election. And Cuban is bragging here that he put on the biggest hedge he's ever put on in his life, he says, on his equities and on his bond positions due to Trump. And Rico wants to know if he's talking about buying puts. If it was anyone else, I would probably say, yeah, they're probably referring about something else, maybe some offsetting positions, maybe even some sort of other product hedge. But Cuban actually has a bit of a history of using options to hedge. In fact, he probably very famously or infamously, depending on how you view it, in the past. Remember, he kind of came to prominence. He made his money off one big deal with Yahoo back in the go-go 90s when Yahoo stock was trading, I don't know, $300-400 a share, and they were throwing around like paper to acquire whatever they wanted, and they acquired Cuban's Broadcast.com for somewhere around $1 billion. Of course, we all know what happened to that Yahoo paper. It wasn't really worth, the shares weren't worth what they were printed on, not too much thereafter, and a lot of his partners, I think, and other investors in that venture lost their shirts, except for Cuban, who was savvy enough to buy some puts on Yahoo and protect some, if not all, of that investment. And he went on to grow it and spend it on the Mavericks and everything else, and become a reality TV star, whatever the heck else he is now. But that said, so I wouldn't put it out of the realm of possibility that he is speaking about doing just that, going out and buying maybe some S&P puts or some equivalents out there in the fixed income products to hedge that position. Uncle Mike, what are you feeling here, sir?
No, it wouldn't surprise me. And he does very frequently. He does tweet out. Not that I'm on Twitter by any means, but you see just things on the general news media about him buying calls, and he seems to be fairly active from everything that I can tell with what he's doing. Just the one thing that I would caution anybody about, and I would say this whether it's Mark Cuban or anybody for that matter, whenever you hear someone say, "Oh, I bought all these puts," or "I buy all these calls," they're not under full disclosure financial obligations like I am to tell you the full story. So in other words, if I ever say, "Oh, I'm bullish on Apple," or "I'm bearish on Apple," if I go out and just say, "Oh, I bought a bunch of puts on Apple today," well, if I have 20,000 shares of stock on Apple and I bought 10 put options, big whoop. But Mark, and I have to disclose that. I mean, I'd never do it in exact numbers, as you guys have heard on the show before, but I always try and give a very full picture of what my sentiments are, what I'm doing, why I'm doing it, that type of thing. Mark Cuban has no obligation to do that, nor does Carl Icahn or anybody else. So just understand that if you hear him saying something like that, make sure that he's telling the full story. And I'm not trying to say anything bad about Mark Cuban. I watch Shark Tank all the time, quite honestly. I think it's a good show, but just understand that he's not under any obligation to tell the full story as someone who is registered is. Are
you saying he might only cherry pick his winners and announce those to the world? How dare you, sir? That
nobody does that.
Someone on reality TV would bend the truth. I find that hard to believe. Sir, Mr. Rock Lobster, I believe you were out in the pit when these happened, or, somewhere along those lines. You were floating around somewhere out there. What do you have to say? I'm sure a lot of your mentees have talked about the old infamous Cuban collar over the years.
Yes. It was the Cuban collar, and I'm just guessing he exercised his puts. That was one we heard of. I mean, literally very, very as soon as the market started to undo. So the only way I could think that the rumor was true was that he actually did it, because he certainly wouldn't be a billionaire if he didn't. He would be just a kind of a sort of millionaire probably. But he obviously is not, because he bought himself a shiny new basketball team. So that was the that was one of them. And it's funny because I remember just friends, because I was living in San Francisco at the time, .com boom, and a lot of .comers are in there. And they were asking me, oh, my stock's this. And I told them the same thing: collar. But I don't want to give away the upside. I go, dude, your company's already worth like $3 billion. Okay. Give away some upside, buy some puts. And I would say more often than not, way more often than not, nobody collared their gains. I mean, Cuban was famous because he did it. I know.
am so shocked.
They would not. They just could not see it. The company doesn't make money, and it's got a $2 billion market cap. Why collar it? Why do I try to lock something in? Because but they didn't. So
just think how the landscape of our reality TV would be different, so different today, if not for those puts, options, saving our reality TV spectrum there, and also our basketball teams. All right, moving on. Comments here. Phoenix Rising, we posted an article on the site about asking whether Congress will change, repeal, or destroy Dodd-Frank. He says, yeah, good, he wants it destroyed. So he's not a big fan, apparently, of any regulation. We'll see. I don't know if destroying is the way to go. I think maybe some repeal could be in order, and some fixing probably would be good. But destroying, I think they did a lot of good with that too, and turning completely in the OTC and credit default swap markets, which was pre-2008, was just the Wild West. It still kind of is, maybe not as wild. It's kind of just West. But that said, they did a lot of good work there. Still a lot of good work to be done, but I don't think repealing it would help just about anybody. We got a question here from J Nick. He or perhaps she. This goes back to what we were talking about earlier. When the market is rallying like it is now, what's wrong with just buying calls? Seems to work, or is that just too basic? Nothing's too basic. These things work, and certainly when you have an environment like we had over the past week, a week or maybe not week, couple of weeks since the election. Seemed like it was just yesterday, but what a maelstrom it has been since then. When we have an environment like we've had over the past couple of weeks, yeah, buying a call works. I mean, this is kind of the environment you need for that to pay off. Let that be illustrative to you of what you kind of need. The long, kind of slow, languorous upside move that a lot of these names usually do, not really so good for out-of-the-money call buyers. Now, I'm assuming that's what you're talking about. It's where people mostly aggregate their liquidity on the call side, is buying out-of-the-money, cheapy out-of-the-money calls. But in a market like this, things are rocking in north to the upside. Yeah, buying a call works. It's pretty straightforward. You don't even need the spread leg. 9 times out of 10, you're going to want that other leg to offset the outlay and get some of that. The other things working in your favor we always talk about here, like the gamma and the theta and all the other fun stuff we like to do here, and mitigating your risk. But in an environment like this where things just work and rocket north, yeah, buying the stock works in this environment too. That all works. So yeah, these are kind of the environments where you don't need to be super savvy in terms of just riding the market up. And now let's say things turn around here. I know it's unfathomable, but let's say it does. Now what is your call going to do for you? That's when the savvy portion comes in, having to roll and adjust, take it off, maybe putting on spreads to the downside, all the fun things we like to talk about here on a regular basis over here on the old odd block. Uncle Mike, you're taking umbrage on me. Here I am talking, and you're taking umbrage on me behind the scenes. What have I done now, sir?
Well, you muted me, so I couldn't take verbal umbrage. I had to give the I am umbrage here.
What are you taking umbrage on, sir? If I may be so bold.
Well, let me answer. I have a comment on this question, then we'll get back to the umbrage of how I was muted. I had a really good rant going, and Andrew heard it, but the audience has to miss the spirit of my original rant.
The magic power of the hosting chair.
It's something else.
I'm omnipotent and not perhaps beneficent up here sometimes.
Omnipotent, but okay, got it. Well, you win the vocabulary award, no doubt about that. But in terms of just buying a call if the market's going up, you're right. There doesn't take a lot of market savvy, or it doesn't take a lot of savvy in terms of strategy selection to do that. I remember when I was working at Options Express, probably about 10 years ago, or about 9 years ago, right when the market was in the phase of crashing, and everyone was telling me, I was the director of education. It was my job to just basically come up with investing strategies, among a lot of other things. But everyone was pushing me to use the inverse ETFs. I shouldn't say everyone, but I was being pushed by some people in the marketing department that were not how can I put this? They didn't know a lot about options to really push the inverse ETFs. And that was when they were first coming out. And I was saying, okay, well, I can go through them, but you need to understand this is how they work. A lot of times they're calculated daily. And if the market goes down 10% in a year, it doesn't necessarily mean that they'll capture 20% of the downside because of this, that, the other. And I explained to them everything. And the only thing that I was getting, the only comebacks I was getting were along the lines of, but I'm making so much money doing these. You need to do these inverse ETFs. I'm like, okay, well, you could have made more money if you did a short futures contract doing this, that, or the other, and you would have had the same sentiment, but your profit would have been greater. Well, I'm making so much money doing this, 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 and this. And it was one to where I couldn't really convince them to do so. So thankfully, I wasn't pushed extremely hard to do them, because promoting inverse ETFs as a viable way to be bearish was not a good thing, in my opinion. In terms of the umbrage, just the rant with which I was going to say, trying to talk someone into doing a collar who doesn't want to do a collar and that thinks the stock is going to go up infinitely is about as easy as talking somebody into doing a combination rectal, optal, root canal exam. It's much easier to do that over trying to talk someone into doing a collar who sees unlimited upside to their stock. And after it doesn't go up, then they get what's called optal rectalitis, where your optic nerve crosses with your rectal nerve and you get a crappy outlook on life.
That's all sorts of disturbing. Wow. Maybe I muted you for a reason, sir. The imagery you brought forth there, deeply, deeply unsettling. Mr. Rock Lobster, anything you want to add to that visual image, the word picture Uncle Mike just painted for us?
I think it's best if we just let that hang in the air as it was intended to do. let's have one of our live listeners save us. RealRK again chiming in. He says he wanted to thank us for he doesn't see the logic in rolling the 12s on good old Cypress either. He says Marvell's another one. He also asks about Tesla put spreads. Just acquired double the amount of debt, are under SEC investigation and burn billions a year. Great stock, LOL. I think he's asked before about buying straight up naked Tesla puts, I think a few weeks ago. Of the two strategies, RealRK, I like this one a lot better. I always like put spreads, going back to our earlier example, notwithstanding of the market rocketing north and buying a call working out. Yeah, a blind squirrel finds a nut every now and then, but 9 times out of 10, that put spread, I should say, is going to hold you in better stead over the long term. You don't mention any strikes you like here, but you know the deal. You get into Tesla, those puts are going to be a fair bit pricey. Again, that's why the spread helps you out a little bit, reduces some of your outlay up front, makes it a little bit easier to stay in over the longer term. I don't know, Mr. Rock Lobster, anybody in your pitch chat pricing up any interesting Tesla puts out there? Anything catching your eye out there? Yeah, I mean, it's kind of an ongoing thing. We've always tried to figure out how to get our puts for free in that. So sometimes we finance with like call time spreads that are closer to the money, or we try to finance like a cheap put butterfly that's like 2 to 3 months out, something like that. The problem with Tesla is just, it's Elon Musk just comes online and says something great, and the stock rallies 15 or 20 bucks, and it makes all the put buyers sad. It has not been able to make that move back with the rest of the market. So I think it might be one of the not beneficiaries of whatever the Trump rotation is, if we can call that, is that a phrase, that, the green, the Tesla's made a lot of money on government subsidies, and that's helped, and Solar City. So I think it's going to take, and listen, and he's a considerable talent without question. But it's going to take all his talents to kind of ride this out, because he's close now. He's going to have to start making some money to keep the stock price where it is. Something somewhere has got to start generating some bucks. And I think that's kind of the, everybody's been shorting Tesla since it was 28 bucks, and that has not gone very well. So, everybody can say, I finally was right. I was wrong for 200 bucks, but I'm right now. So it is I would say, yes, there are ways to finance. I think put time spreads, usually because the puts are expensive, and then you have like maybe 1 or 2 protective calls, just for the sad gaps that tend to happen. But that's really the only way I could see to trade it, because it's it defies gravity. So, I don't like shorting stuff I don't like spending a lot of money on things that defy gravity for an extended period of time. Doesn't mean it can't drift lower, though. So like put time spreads or some kind of way to finance some puts with, I think almost now you might be able to dip into some out of the money sorting, some out of the money call spreads. Just because now the barrier for it to grow, I think now that it's starting to almost produce some dollars, their hurdle is actually, I believe, a little higher now to get the stock price up. Oh yeah, like an 80-60 put spread, that's reasonable. You go out 80-60. Even if you go out to January, it's still $5. So, yeah, I mean, when you usually all those put spreads, you need Tesla has to go down. That's the bottom line. So it is a tougher road to hoe. Although the volatility looks, I think it's at the bottom of the range. So, but it needs help. That's all I'll say. Out of the money put spreads need help to grow. So. The flies are a little cheaper sometimes, so again, just depends on what you think and how long. So
I like that.
That's my stuff for Tesla at this point.
Out of the money put spreads need help to grow. I like that. That analogy, that wisdom works for all things. Out of the money calls, out of the money puts, or put spreads. They all need a little bit of water, a little bit of fertilizer. Meanwhile, we need to keep on rolling with our show. We can keep answering questions all day. I love your questions, but we've got to keep rolling right on into Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody, welcome to Around the Block. A bit of a quiet, truncated week ahead of us. Of course, it is coming up on the big Thanksgiving holiday season here in the U.S. If you are one of our international listeners, well, you get a latter part of the week off, or at least partially off. Which isn't bad. That means the earnings calendar fairly light for this week. Uncle Mike's big favorite, though, Dollar Tree, coming up tomorrow. So he'll be excited about that. He can get some new wardrobe for the holiday season. And then, of course, GameStop. I can see the umbrage already. GameStop, good old Rock Lobster's favorite, loves his Grand Theft Auto. It's the only game he seems to know about, which is fantastic. Everything, pushing all the polys, all the pixels with the Grand Theft Auto from many, many years ago. And Urban Outfitters and a John Deere, another name from the Rock Lobsters area on Wednesday. Then it kind of falls off a cliff because, of course, we have the big holiday coming up on Thursday. So not much going on. But that said, if there is something catching your eye for the rest of this week, other than umbrage, I'll let Uncle Mike take it first. Have at it, sir, with your umbrage.
Oh, well, I have no more umbrage. The only thing that you really can watch this week, I think, is you can see the news reports of how things are going on Black Friday. See how it goes for the most part. If there's record crowds at places or there's hardly anybody there, you can watch that, but you got to take it with a grain of salt until the numbers are really finalized. So overall this week, the main thing I'm watching is football. But it is that time of year again for me to tell my annual Thanksgiving joke. You should have sold your pumpkin futures by now because Halloween is over. Invest in Christmas tree futures because Christmas is coming, but stay away from turkey because turkey has no future. I will talk to you later.
There you go. Jokes. You're just full of jokes. I let you on the hosting chair for one episode, sir, and there's no stopping you. You're on the rampage. And Mr. Rock Lobster, what are you watching for the rest of this week aside from out of the money Tesla? Out of the money Tesla put spreads that need some love to grow.
11 handle VIX. Seeing if the euro, how that reacts to maybe this little populist streak, if the trend continues, and mostly just looking. I'm not going to be surprised if we close over 2,200 in the SPX this week. I'm kind of thinking we will.
All right, ladies and gents, that music means we have come to the end of yet another option block odyssey. We started talking all things rally ho in the marketplace and VIX downside palooza, got into some cool UA, and then got in a bunch of your questions. Thank for those. We love those. We always love the crazy directions that you guys pull us. Keep those coming. But before we go, let me check back in with my cohorts here. my partners in crime. See what they have coming that may interest you. Let's start with you, Mr. Rock Lobster. Aside from eating some delicious vegan organic tofurkey on Thursday, what else you got planned for this week, sir? And what's coming, I should say, in the land of the pit?
Yes, we have an interest rate class will be up soon. I think it's it's either going to be the 3rd or the 10th of December. And what does interest rates do to option prices? So that might help people do some learning on what maybe it's a topic we haven't talked about in 8 years. But
I was going to say, the rise of Roe. Roe is back.
It is.
You know the market is changing when we start talking about Roe again.
I know, and wow, you used to look at your balance and say, oh wow, where's my interest credit going to be this month? But let's see. Also, it will do something for you, but it's good to do some learning on the subject, and that is what we will do.
There you go. Check them out, optionpit.com. You too can explore the mysteries of Roe. I knew once, it's been almost a decade we've been doing this network. I think we talked about Roe. On one hand, you can count the number of times. So I knew once that started changing, we'd be in a different regime. Maybe this is the beginning. Maybe you are the canary in the proverbial coal mine, sir, of a different rates future going on. And Uncle Mike, what's cooking in the land of RCM alts/M2SA on Twitter /going long?
Well, if you don't want to manage your own Roe, feel free to contact me. We do a lot with Roe. Well, we will once it exists again, which it looks like it will soon. So anyway, if you are looking for a financial advisor who does know what the meaning of Roe is and is not scared to death when you say the word call option, feel free to contact me. I'm at 312-212-3531, or shoot me an email at mtusa@rcmfs.com.
I'm scared to death when you say call option. That's how I got this job hosting this show. It was my therapy. Every time I said call option, I was terrified. And then I figured, hey, host a show for a decade and you'll get over it. And somehow magically that seemed to work, sir. So thank you for that. Unfortunately, listeners, that's probably going to do it for our live broadcast for the rest of this week. No option block on Thursday. Obviously, everyone go enjoy your vegan tofurkey like the Rock Lobster does over there. And, of course, no show on Friday because you guys will be all out shopping. So we won't be doing any of those. That said, you may see us pop up at Rear Ugly Heads on Wednesday afternoon. I'm going to hop on the old options playbook this week, and maybe I can twist Brian's arm into doing it live. And if that's the case, maybe you'll get another dose of us for this week. So look forward for that. And on behalf of the Rock Lobster and Uncle Mike, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show and everything else you do. We love you guys out there. Have a great holiday, and we'll see you next week for more of the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.